Hey everybody, I hope everyone is doing well and had a good day. In today's video, we're going to review the E-mini S&P 500 5-minute chart for Wednesday, July 29th, 2026. Here's the daily chart. We can see the market has been in a trading range for a lot of bars, and then it was in this tight trading range over the past 4 trading days, just about in the middle of the range. My expectation here is that it's a limit order market, and there's probably sellers above yesterday's high and above the high of July 27th. This was last Friday or Thursday. Probably sellers above yesterday's high or above Monday's high, and buyers below yesterday's low or below July 23rd's low. So probably sellers above, buyers below, limit order market. And then for the bears, micro channel with a gap. It's a bear breakout, a pullback, a second leg down, a pullback. The bears are attempting to get a third leg down, but also probably support at the channel line. And then if we look to the left, the start of this rally, support here as well if we get down here. At least support expected. Here's the 5-minute chart. Trading range at the end of yesterday, you could call it a bear channel. There's lower highs and lower lows, but the market is sideways enough. It's behaving like a trading range. Either way, traders are buying low and selling high. Gap down and a breakout below these lows. Again, whether you call it a trading range, let's use the low of bar 80. Maybe that's the bottom of the trading range, or maybe it's a bear channel. Either way you look at it, gap down to support and then a breakout below the support on bar 1. More likely that we're going to get the bull breakout. The bear breakout of the bear channel is going to fail. The bulls, they have a bull trend over here, bull breakout, and then a bear channel, bull flag. Expect the bull breakout, trend resumption. Bulls get a breakout, pullback, and second leg. But the trading range went on for more than half the day. There's about 50 bars, maybe more than 50 bars in this trading range. So breakout direction may be closer to 50-50 than the bulls want. So market gapping down and breaking out below the bars to the left, but it's a weak bear breakout. It's a bull reversal bar. As far as buying, it's a weak bar. The signal bar itself is a doji. There's probably sellers above bar 1 and buyers below bar 1. Inside bar 2, another doji bar, probably sellers above, buyers below. Looks like a limit order market. The bears are hoping we're breaking below the trading range to the left and that the market falls for a measured move down. The bulls are hoping for the opposite, that it's a failed bear breakout below a trading range or below a bear channel, and the bulls are seeing it as a bull flag. They're looking for the upside breakout, trend resumption, test of yesterday's high. Most bars test either the high or the low of the prior bar. Most days, so with that being said, it follows that most days break out above the prior day's high or below the prior day's low. So that's these blue lines, yesterday's high, yesterday's low. These prices act as magnets. Another inside bar, so probably sellers above and buyers below. Outside down 4, so not a lot of buying pressure. As far as this being a failed bear breakout, it's really difficult to make an argument for buying, other than buying, arguing that you're buying value, you're buying near support, maybe the bear channel line, we're failing to break below it, it's below the moving average, but there's really no strong bull breakout signal, at least through here, that you're basing a trade on. The higher time frame traders, maybe they're saying, here's the bull breakout. They're buying, they're scaling in lower, expecting a big second leg up. But in the short term, difficult to make an argument for buying, but also difficult to make an argument for selling. It still looks like a limit order market. Sellers above and buyers below. Bar 4 and bar 1. Strong bear breakout, bar 5. And that changes things. The traders who are buying below bars, whether they bought here on bar 1, 2, 4, buying at this support, betting that it's support, they're trapped into a losing trade. And then strong breakout 5. Any trader buying for any reason today is trapped by bar 5. And if you look at the chart from the end of yesterday into today, it's a fairly tight bear channel, not a lot of buying pressure, especially through here. So this is a breakout on a higher time frame. The first reversal attempt up is probably going to fail. The bears will probably get a second leg down and some kind of measured move. Enough momentum, it's reasonable to sell here, looking for at least a little more down. It's more clearly always in short now that we have bar 5, but with the bear breakout 5, the risk reward gets worse. The bear stop is at least above bar 4, and it's obviously much further than it was before bar 5. So the risk reward gets worse, the risk gets bigger, but probability is increased for the bears. A follow-through bar closing above its midpoint. It's a buy reversal bar, but the context is bad for buying. The magnet yesterday's low, just below. It's a weak stop order buy signal in the context. It's a bear breakout, so there's probably sellers above bar 6. Minor reversal, trend resumption down, 7 and 8. 8 turning back down, reasonable, low 1 short. It's a good sell signal bar. We're probably going at least a little bit lower, like to yesterday's low, but that is expected to be support, so we'll see what happens when we get there. The approach so far has been a tight bear channel, so the bulls have to do more. Strong breakout bar 9, closing below yesterday's low and below July 23rd. That's the first of 4 bars in this tight trading range I showed on the open or on the daily chart. 3 legs down to bar 9, so yes, you can say it's a wedge. As far as buying, because it's a wedge bottom, I would not. It's a tight channel with very little buying pressure. There's open gaps. Any trader buying below bar 1, which on the open looked like a reasonable thing to do, limit order market, a lot of trading range bars. Anybody who bought at the low of 1 got trapped by 5, and those traders never had a chance to exit at break even. The same thing happened below bar 6. Any bear buying below 6, maybe they argue, okay, it's a bear breakout. We pulled back. Now it's a channel. So bears are probably taking profits at new lows and selling pullbacks. Anybody who bought below bar 6, whether that's a bull to buy to go long or a bear buying back shorts to take profits, both traders are trapped. The bulls are trapped into a losing trade. Obviously, if you bought here, you're holding a losing position by the close of bar 9. But also the bears who took profits below 9 are disappointed. They wish they held on to the trade longer, and that creates resistance above. At the close of bar 9, there's still an open gap. We'll see. Will the market pull back to this breakout point? And if it does, the expectation is that there's resistance here, sellers, and this will probably get a second leg down. So 3 legs down, yes, you can expect a bounce, minor reversal. Bears take profits. Bulls maybe buy for scalps, but I don't think buying is worth it. What the bulls do have going for them is these lows that should act as support. In reality, though, let me just finish this thought. So 3 legs down, beginner, maybe they see a wedge bottom, a bull bar, so do you buy above the bar? You always have to think about trades with the trader's equation in mind. So what's the risk reward profile and what's the probability? Obviously, if you buy above bar 10 and put a stop below bar 9, relatively small risk, you can make 3 times your risk. If you win on the trade, the market comes back to the bar 1 high. It's a trading range, maybe. But whenever you have great risk reward, like you can make 3 or more times your risk, you must have low probability, because there's no such reality as a perfect trade. There's no institution that's going to give you great risk reward and high probability. So whenever you have great risk reward, the opposite side of the trade has high probability, and vice versa. If you have high probability, you probably don't have great risk reward. So bar 10, there's probably sellers above 10. The tight channel probably going to get at least a little bit more down. We found sellers above and continuing to break out below these support levels. So good for the bears, bar 12 breaking out, but tail below the bar. So we're finding some buyers into the close of the bar and below bar 9. So we're channeling down here, probably buyers below 12, but bad stop order buy. Expect sellers above. Sellers come in, the bears get another leg down. 3 smaller legs down here, spike, pullback, channel, leg 2, leg 3. So probably profit taking from the bears here on bar 15, but it's another bad stop order buy above the bar 15. The bulls still do not have much buying pressure, and that's a problem. So it makes me think best case for the bulls here is probably sideways. We're probably going more sideways to down here. This is a strong sell-off, and the bulls haven't really done enough to convince me that we're getting a major reversal. But we did fall below 12. The traders who bought below 12 could scale in and exit with a profit. Now, when we fall below 12, the traders who buy at the low of 12 and scale in will probably make a profit. So this channel might evolve into a trading range. I think that's more likely, especially with the higher time frame context. But the momentum is strong for the bears, so I do not expect a major reversal here so far. Reasonable to exit shorts above 16 based on the context. 3 legs down, far below the moving average. However, we broke below the expected support, and because of that, the support or the expected support becomes resistance. So we may bounce here after 3 legs down, but I expect sellers somewhere in this area, whether it's let's just mark this July 23rd low or yesterday's low. Bull breakout 17, strong enough bar. It'll probably get a second leg up. The traders who were selling anywhere below, whether it's the close of 15, close of 16, anywhere in here, they're trapped by the bull breakout, and that can usually produces a second leg sideways to up. But because of where we are, market broke below support. Now it's testing it. It's probably resistance. So I expect sellers above 17. 18 inside bar, trading range bar, probably sellers above and buyers below. Bulls getting a second leg here on bar 19, but right at resistance. Expect sellers above. And then 20, another bull bar. So good for the bulls because it's a micro channel, 15 to 20. But look at the structure through here. So trading range bar 16, breakout 17, leg 1, pullback, leg 2, deep pullback, overlapping bar, and then leg 3. So it's a channel on the lower time frame for the bulls, leg 3, testing a channel line, the bull channel line, and at resistance. After a tight channel is a bear breakout. Expect a minor reversal and a second leg down. So there's a magnet at the low. Probably going to go back and test there before there's any major reversal. For bar 20, it's basically leg 3 at resistance, not a great buy. 21, bear breakout bar. Good for the bears, but the channel up was tight. It's a micro channel, so the first attempt down will probably fail. There might be buyers below 20, at least for a scalp in the tight channel. We'll probably attempt to get a second leg up. So for selling bar 20 or 21, it's an okay sell, I think. Reasonable to exit longs below 21, but to sell 21, it's reasonable if you're willing to scale in higher and sell more above 21. There's probably sellers up here, trapped traders around the close of 20. We get a deep pullback and then a follow-through bar, basically minimum follow-through for the bears. But it's a reversal setup on the lower time frame may be more clear. Bull channel, trendline break, retest of the highs, and then a lower high. Basically, it's a lower high reversal for the bears. But on the 5-minute chart, it's more clear. It's in the direction of the trend. Tight bear channel, minor reversal, possible trend resumption, exit longs below 22, and stop order sell below 22 at least for a scalp to test these lows, the bar 15 low. Good looking reversal bar 23, but second leg down expected from the tight channel. Basically, leg 1, pullback, expect at least an attempt at a second leg down. Also 21, leg 1, pullback, maybe the bears get a second leg down. To buy above 23, the upside's limited. We just found resistance here, so probably sellers above 23. We found sellers above. Basically, the bears get a channel down here. Bear bar, pause, bear bar, pause, bear bar, probably buyers at the 15 low. Structurally, it's a wedge. It's a channel with 3 legs down to support, but it's a tight channel down to 27, so there's probably sellers above 27, sellers above 28. 28 looks like a reasonable buy setup. I think structurally it's okay, but the context makes it weaker. The fact that it's happening after a tight bear channel, all the bars completely below the moving average. I think it'd be a reasonable buy above 28. If this was occurring above the moving average, maybe low in a trading range or in a bull trend, but because it's a bear trend, it's a double bottom reversal attempt. But most reversal patterns most reversals fail, and the reversal pattern becomes a continuation pattern. The bulls can argue that it's a bear trend. Here's your bear trend line. Here's your trend line break. Here's a 3-legged retest of the lows, possible double bottom, major trend reversal buy above 28. It's a reasonable swing trade. You're getting good risk reward, but it's low probability. Better if there's a second entry long. Like I said here, this tight channel needs a trend line break of its own, which we may be getting 28, but better to buy below bar 28 than above 28 because of the tight bear channel here. Now, anyone who did buy below 28, they're trapped by bar 29 and further trapped as 30 went lower. But 30 gives those traders an opportunity to exit at break even. If they bought below 28, market came back and tested that low, and it's probably resistance. 29 may get a second leg down. And it does here, 31, another outside down, bear breakout bar. That'll probably get a second leg down as well. But we're breaking below a channel line. There's a bear channel. The market's breaking below the channel line here on 31, far below the moving average. So the bears who are selling, their premise is momentum, high probability. So as soon as the market begins to hesitate and go sideways, the bears will probably exit. And in general, you expect a bear breakout below a bear channel to fail and reverse and test the trend line. The trend line being maybe here. The bears get a follow-through bar, but closing above its midpoint, not as strong as it could be, but it's a bad stop order buy, probably sellers above. And 30 continuing lower, but still it's a bear breakout below a bear channel. You expect a reversal within about 5 bars and a test of that bear trend line. Still okay to sell, your premise being momentum, but if that momentum begins to hesitate, bears will be quick to exit because they know they're trading a late leg far below the moving average. 34, reasonable bar, reason enough for bears to exit swing trades above 34, but to buy above 34, it's a low probability trade. It's a tight bear channel. Expect sellers above the first reversal and a second leg down, at least an attempt at a second leg down. But for the bears, it's a bull bar closing near its high. It's reason enough to exit shorts, and then you can re-enter short below a bear bar. In this case, we get a strong breakout bar, 35, which is good for the bulls. Little overlap with the prior bar. There are trapped traders by bar 35. So the bull breakout is strong, but it's still a minor reversal. There's probably sellers above. Sellers at the breakout point, bar 15 low, bar 31 high, moving average. Expect sellers above. Tight channel, expect the first reversal to be minor, and expect a test of the lows. But strong enough breakout, there's probably buyers below. Another bar added to the micro channel, that's good for the bulls. Bad stop order sell below the bar, expect buyers below 36, buyers at the high of 33, buyers in the buy zone of 35, probably buyers down here as well. Expect a second leg sideways to up. 37, good looking reversal bar, but after the micro channel, the first attempt down will probably just be a pullback, and the bulls will probably get a second leg. So not a great sell. It's a low probability sell below 37. And then a bad entry bar for the bears who sold. High one buy, might be okay to buy, but if you do buy, the stop does not go below bar 38. The stop is below 34 at a minimum, and some traders will use a wider stop, expecting buyers below 34. 37 gets a second leg down, 39, and then reversing up for a second time, bar 40, that's a high 2, high 1, pullback, high 2. For the bulls, they're expecting a second leg up, bull bar closing on its high, bigger than these bars. That's a reasonable bar to buy back shorts. Really wasn't great to sell here anyway. So it's still probably always in long, as the bulls are expected to get a second leg up. Reasonable stop order buy, 40. Testing resistance, but breaking above it and getting follow through. Another micro channel. Pretty good structurally. The bars are fairly uniform in size, closing on their high, closing above the highs of the prior bars. This is sustained buying. It's good for the bulls. There's trapped traders, and that's probably going to produce a second leg up. Accelerating on 43, so we might pause as we approach resistance, but strong enough buying. The first reversal will probably fail, be a pullback. Bulls are expected to get a second leg up. Probably buyers below 44. 45, another bull breakout bar. It's a micro channel. Expect buyers below bars. It's always in long. Hard to make an argument for selling here in such strong bullish momentum. Doji bar, probably buyers below. Bad stop order sell. 47, similar to 37. Micro channel, then a reversal bar. You get good risk reward, but if you have good risk reward, it's a low probability sell. The channel up, the bull breakout is strong. There's trapped traders below, and you can expect the breakout to get a second leg. 48, bear breakout bar, good for the bears, increases the probability that the bears will get a second leg down. But the downside is probably limited to probably buyers below 45, buyers at the moving average. And the bears basically get a spike and channel down here to 51. On the lower time frame, it's a spike and at least 3 legs down, bouncing at support. And then a bull breakout bar 52. So breakout, minor reversal, several attempts down, failing. Then a breakout 52, reasonable stop order buy. If you're short for any reason, you can exit above 52. Then 53, another bar added. So a follow-through bar, breakout follow-through, probably buyers below, second leg up. Likely, there might be resistance at the close of 46 and the high of 47. We find buyers below 53, and then the big breakout bar, 55. Anybody selling, it's kind of what I said earlier, I forget where. It's the same but opposite direction. Anybody who sold at the close of 46 or the high of 47, whether it's a bear selling to initiate a short position or a bull taking profits, either way, the trader is trapped by bar 55. The bears are holding a losing position. The bulls are wishing they held on to the trade longer. That creates support, and momentum is good for the bulls. Probably will get a second leg. One problem for the bulls here, you can call it leg 3 in a channel, testing the channel line. So not a great location for buying up here. But bulls will buy a pullback. The first reversal attempt down will probably fail. Doji bar, expect buyers below. 57, strong enough breakout bar. Maybe it gets a small second leg, but this is still probably a minor reversal. Expecting support at the 47 high and the close of 46 and the high of 54. So anywhere in this zone, I'm expecting buyers. Heavily overlapping bar 58. It is a micro channel. The first attempt back up will probably fail. And bears will probably get at least an attempt at a second leg down. But on the lower time frame, it's a bull breakout, then a bear channel, bull flag. Now we're testing support. Again, we might bounce here. I'm expecting a bounce here at support, but the channel down for the bears, it's a micro channel to 59. So there's probably sellers above 59 for at least a scalp, but a second entry long is reasonable. 60, bull bar closing on its high. Not worth selling above the bar. Too much risk of getting the bull breakout and a second leg up. Some bears will sell, arguing that the channel down is tight. First reversal will fail, be a pullback, and lead to a second leg down, which the bears do get here, 61. But now the bulls have a double bottom. Bull breakout, one leg down, pullback, second leg down. So basically high 1, high 2. And then a strong breakout bar 62. Near resistance, so difficult to buy here, especially when it's leg 4. Probably sellers above 55. Sellers at the bar 1 high. And 63, strong breakout bar. Breakout follow through, good for the bulls. Breaking above both resistance levels. Probably going at least a little bit higher. But once again, it's just difficult to buy leg 4 near resistance. The closer we get to yesterday's high, it's just going to get harder to buy. The bulls are buying momentum here. They're not buying value. They're buying far above the moving average. But the bull breakout is strong. It's probably going at least a little bit higher. The bulls get more follow through, but at the channel line, you can expect resistance, yesterday's high, expect sellers. Bear bar 66, not an especially strong bar, but the context is it's good enough for bulls to exit below the bar. For bears, maybe it's not. It's definitely low probability to sell below 66, stop above 66. Great risk reward, but low probability at this moment. And then 67, probability increases for the bears. The bears get a strong breakout. The bulls are trapped up here. And look what happened on 67. Bulls are buying closes 62, 63. Bulls buy every close. If a bull buys the close of bar 65, they're disappointed with bar 66. They know they're buying near resistance. The bull channel line, yesterday's high, but they buying closes is working here. There's strong momentum. No, buy until the trade fails. Now they get a bear bar for an entry bar. They're disappointed. Anybody who bought the close 65, disappointed with 66. 67 gave those traders an opportunity to exit at break even, and traders took it. Bulls and bears selling 67. Reasonable sell 67. Strong bear breakout after 4 legs up to resistance. Strong breakout, so yes, this may get a second leg up, but at this instant, 67, it's probably always in short. Even if we get a deep pullback, the bears will probably get a second leg down. And instead, we get a strong follow-through bar, 68, micro channel, strong signal for the bears, probably will get a second leg down. Climactic reversal. The bulls get a strong 4th leg up, but then a very strong reversal down to 68. Clearly, always in short here. The bears will probably get a second leg down and possibly a measured move. 69, a bad stop order buy after all the selling. Expect sellers above 69 and a second leg down. We go outside down. The bears continue down with their second leg. Very strong Momentum, always in short still, and probably sell the close. 72, another bad stop order. Buy, expect sellers above the bar, sell the close, sell above, and then continuing lower, 73. There's probably support here at the current low of the day, but enough momentum, no reason to buy here. Probably going at least a little bit lower. It's late in the day, so not necessarily worth trading here, but it's still always in short. Bears selling based on momentum. We're far below the moving average and we're approaching support. So let's see if the market gets there and how it reacts. 74, bear breakout bar, closing below all the bars to the left. Good for the bears, but most of the bar is not breaking out below the bars to the left. So let's see if the bears can get a follow-through bar. Small follow-through bar, bad stop order buy, probably sell the close, sell above, at least for an attempt at a second leg down. And then 76, a bull reversal bar, closing near its high. Low probability buy, obviously, after all this selling. This is not likely to reverse and undo all the selling, but it is occurring at support. It's late in the day. It's a bull bar closing on its high. Bears can exit above that bar and look to sell again below a bear bar. And the stop order above the bar, 76, did not trigger. And it looks like we're beginning to channel down, at least on the lower time frame. And 78, another breakout bar for the bears. Once again, on the lower time frame, there is a bear channel line. The market's breaking below. That might be an incentive for bears to take profits, but hard to make an argument for buying to go long here. And we continue lower. All the way into the close, we finally get a bull bar, but most likely due to profit taking from the bears. Okay, for stop orders today, nothing great on the open for stop orders until bar 5. I thought was a reasonable bar to sell the close and sell below. Stop order sell below bar 8. Thought 9 was better to sell a pullback based on the context, 3 legs down, minor reversal, but also trend resumption likely. So selling 9 is okay, but selling a pullback would have been better. Not really great stop order trading through here. 21's okay for stop order sell. But I mentioned the tight channel, so the first attempt down might fail. Second entry short, basically micro double top, up, down, sell below 22 was reasonable for the tight channel to get a second leg. And then through here, not a great buy. 23, second entry would have been better, but you got a doji bar. I mentioned my thoughts on 28. I think if you're buying 28, you're buying against a tight bear channel, so better to wait for a second entry long, wait for a trendline break and a test of the lows. 34, low probability stop order buy. 35 increases the probability, but worsens the risk reward. Reasonable buy. 35, it's a bull breakout. There's trapped traders below. You're probably getting a second leg. 40 was a reasonable buy. 41, 42, there's really no reason to sell here. And if it's hard to make an argument for selling, it's reasonable to be long. It's always in long. And if it's always in long, in theory, you're buying every tick. So you can buy above 40, buy the close 41, buy the close 42, buy closes all the way up. 47, a low probability stop order sell. Maybe okay to exit longs below and then look to buy above a bull bar. But either way, you can hold through the minor reversal. It's likely to be a minor reversal. Stop orders through here. 52 was a reasonable buy. 54 also reasonable with room to the upside. 55 a little bit of a surprise. I thought 60 needed a second entry because of the tight channel down. 62 a better stop order buy, but a late leg. Maybe difficult to buy here. 67 is a reasonable stop order sell. Sell the close 68. And then this is a sell 70, 71. Late in the day, so not ideal, but just in theory, price action theory, not late in the day. these are reasonable stop order sells. There's no reason to buy here other than taking profits at support levels or measured move targets. This was a bad stop order buy. Nothing through here. And then for limit order trading, it's a limit order market on the open. So probably sellers above 1, sellers above 3, buyers below 1, sellers above 6 after you get the bear breakout, bad stop order, buy signal, so sell above 6, sell above 10, sell above 12, maybe sellers above 15, but you have 3 legs, you might get a 2-legged correction, which we do here. I mentioned 23, not a great stop order buy based on the context. Not ideal to sell above a bull bar closing on its high, but context was okay. Same goes for 28. 27 was a bad stop order buy. Trading range bar, sellers above. 30, low probability buy in a tight channel. You can see sellers came in above, sellers above these bars, but they never triggered. 34, not great for selling above. Okay to exit shorts and look to sell again below a bear bar, but once we get that, 37, now the bulls need a second leg, so buyers below 36, buyers at support to the left. Another micro channel, expect buyers below, maybe buyers below 46, but more likely buyers below the stronger bar, 45. Limit order bulls come in here. I mentioned limit order bulls below 53. Buyers below 56 I thought was reasonable. Buyers at this breakout point, also reasonable. Buyers at the 54 high, reasonable. Why is bar 54 support? Because of the breakout 55. Anybody selling here, or anyone who did not buy 54, they see bar 55 and they're trapped. Bulls are trapped out, or traders on the sidelines are trapped out. Bears are trapped into a losing trade. So when the market comes back here, you expect support. The market bounces there. Limit order trades through here. The bear micro channel got a second leg. We found buyers below 60 and 59, still in that support level. This was a reasonable place to be looking to buy. Limit order sell above 69, bad stop order, low probability stop order buy. Same with 72, and that one didn't trigger. That's a market order sell. Sell the close, sell above. 75, sell above, did not trigger. And that was about it. All right, that's going to be it for today's video. For more on price action fundamentals and how to trade price action, you can visit the Brooks Trading course, link in the description of the video. For more price action fundamentals and how to trade price action, please visit the Brooks Trading course, link in the description of the video. All right, thanks everybody for watching, and I hope everybody has a good night.